Most investors think they're making money, but 90% of rental properties actually fail to produce real cash flow. I was one of them until I discovered one simple system that changed everything. Stay with me because in this video, I'm going to show you the trick that not only makes you cash flow real, but also accelerates your path to financial freedom faster than you have ever been told. Hi, this is Korianne. For those of you who are new here, I have been investing in cash flow real estate for over 20 years. I achieved financial independence in my mid-30s, and my passion is teaching others how to do the same. By the end of this video, you will know the one simple trick to mastering cash flow, how to apply it to your own investments, and why it's completely different from what you have heard before. I will also give you actionable steps, real-life examples, and a system that you can implement immediately to start building predictable income. The trick is treating your cash flow like a business. Most people think real estate investing is just buying a property and collecting rent, but here is the truth. If you don't track every dollar and create systems, your money is slipping through the cracks. When you think like a business owner instead of just an investor, you protect your money, grow it strategically, and avoid common pitfalls. Let me show you how. Number one is track every dollar. Many investors only look at rent coming in and ignore expenses. Real estate isn't about gross rent, it's about net cash flow. Income, for example, like rent, pets, fees, parking, laundry. Expenses, example like mortgage, taxes, insurance, maintenance, property management fee, utility, and reserves. Here is what happens when you track everything. Imagine your property collect about $2,000 a month in rent, but after taxes, insurance, mortgages, maintenance, and reserves, you actually only have $350 left. That $350 is your real cash flow and the amount that can grow your wealth. Tracking every dollar gives clarity. You will know exactly what profit and what is a cost. Without this, you are flying blind. Number two, pay yourself first. Reserve versus profit. A huge mistake investors make is spending all the cash flow without planning for emergencies, repairs, vacancy, or unexpected costs, like a broken roof can wipe out your portfolio quickly. The rule is separate reserves for emergencies from profits, money you can spend. Think of reserve as an insurance for your business. Your portfolio became safe and sustainable, even if the tenants leave or a big repairs pop up. Number three, focus on net cash flow. For example, property bring in about $2,000 rent, but cost total is $1,850 in expenses. Your real monthly freedom number is $150. That is why you must only buy properties that fit your freedom number, the net income you need to cover your lifestyle. Many investors buy based on look good on paper or market trends and get disappointed. So focusing on the net cash flow keeps your investments practical and profitable. Number four, systemize reinvestment. Once cash flow is stable and reserve funded, reinvest a portion into your net property. For example, you earn about $1,500 per month net cash flow. Set aside $500 for your net down payments. Your portfolio grows automatically. I give you some tips for you to increase cash flow. Bank-owned properties can dramatically increase cash flow and net worth because they are often below market value. You can watch this video later as there is a link to the end. Now that you know the trick, let's talk about how to apply this to your own money and investments step by step so you can see results immediately. Here is how to turn the system into practical action. Number one, open a separate business bank account. Even if you only own one rental property, separate your rental incomes and expenses from personal funds. Deposit rent here, pay mortgages, repairs, and all the bills from this account. This creates clarity and lets you see exactly what's profit and what's cost. Many investors mix accounts and think they are cash flowing when really they are just covering bills. Number two, use the 3 buckets rules. Split your net cash flow every month. For reserve 40%, that include prepare vacancy, major expenses. Reinvestment 40%, that means next property down payment. The profit and personal, that means 20%. Money you can enjoy and have fun. So adjust percentage to your comfort, but always protect the business first. This is what separates successful investor from those who struggle. Number 3, track cash flow monthly. Using the spreadsheet or software like QuickBooks, then list rent collected, all expenses, net cash flow. Seeing your numbers clearly tells you if you are moving toward your freedom number or if a property is underperforming. Number 4, only buy properties that meet your freedom number. Ask yourself before buying, does this property produce enough net cash flow for me? Does it move me closer to my freedom number? This keeps you focused on properties that grow your wealth, not just pretty deals. Number 5, automate reinvestment. Set up automatic transfer to a high yield account labeled next property fund. Example, rental nets about $600 per month. $240 go to reserves, $240 net property fund, $120 your pocket. Do this across multiple properties and your rentals fund your next rentals. That's how portfolios snowball into real wealth. Real estate investing can also save money on income taxes. So check my link video on the detail at the end too. Make sure that will also increase your cash flow. Now that you know how to apply the strategy, let's look at why this approach is different from what most people have tried. Many real estate tips sound the same, but here is why this system works. Most investors chase gross rent, not net cash flow. People here buying a rental that cash flow, but they don't calculate true net profit after all the expenses, including reserves. That's why many are surprised when profits appear. Number 2, most investors reinvest randomly. Some save for the next property at the year end. This approach builds reinvestment into your monthly cash flow, like a business reinvesting in growth. Your portfolio funds itself and accelerate your path to financial independence. Number 3, most investors don't separate reserve from profit. Emergency funds are optional for many investors. With this system, reserves are baked in, so you are never caught off guard by vacancies or surprise repairs. Number 4, most investors buy based on excitement, not freedom numbers. People buy property because they look good. This system forces focus. Every purchase moves you closer to your freedom number. So you stop collecting random properties and start building a cash flowing machine. Here is a big picture. This isn't new advice in pieces. It's a combination of strategy into repeatable system. You rental like a business and you stop hoping for financial freedom. You are engineer it. If you want to learn how to invest in bank-owned properties and how to save on income tax when you are investing in real estate, then make sure to watch the 2 videos coming up next at the end. Also, comment below, what is your biggest challenge with cash flow? Have you tried tracking net profits before? I will personally respond and share tips to help you succeed. If you got any value from this video, a quick thumb up would be amazing. And if you want to see more, make sure to hit that subscribe button and join this wonderful community. Happy investing, everyone. Until next time, ciao.